Hey everybody, welcome back. This is Vic, and this is probably going to be considered part two of my original video where I rebalanced my 401k into the stable value fund, also known as what I called it, parking your money. Now, again, I'm not an investment advisor. I'm not a CPA. I don't have any type of financial certification, so you shouldn't listen to me. I'm simply showing you what I did to my 401k and how I feel that I preserved my money in a downward trend. Okay, so what I did was I took the investments that I had in one of my 401ks, and this is what it was before. I went into view and manage my investments, as you see here, as I did in the last video. I took all the investments I had, I brought them all down to 1%, and I invested in what's called a stable value fund, which in all the years I've ever invested into a stable value fund, I've never lost any money whatsoever. So the market closed that day. That was on the 24th. It closed at 27,960 right over here. You see here. That's where I sold it at, 27,960. The highest the market hit as of this video, which is March 22nd, the highest the market hit was 29,550. The last time at 29 was on the February 20th. And then by the 21st, it was 28,992. By then, all the news started coming out. And by the 24th, I said, it's time to park my money. Now, again, you listen to any certified planner or investor, they tell you you can't time the market. They tell you don't sell, write it out. But at my age, I'm looking to preserve whatever principal and interest I've already earned as to not lose it. So what I did is I took my money out at this point here, parked it in the stable value fund. And as you see here, it was a good decision for me at that time. Now, here you start seeing the market starting to rise again, right? From February 27th to the March 1st up to March 4th, it went up to 27,090. It almost was like a point where maybe I should get back in, but I didn't. I stayed out, and it continued to ride down to this Friday's close, March 20th. It closed at 19,173. Now, let me show you another graph here, a hypothetical graph. So I'm not sure what the market, nobody knows what it's going to go down to. It could start climbing again this coming Monday to March 23rd. We don't know. But my point is this, that let's say it goes down to 17 or goes down to 15. Any point below this dashed line here where I sold at, that I rebuy back in, I've sold high and bought low. Anywhere within this area that I buy back in, I've sold high and bought low. So I'm going to watch the market when the news starts to get a little bit better and we start seeing the trend in the market going up. Not immediately, I might not do it here, but let's say right at this point, you know, wherever this happens to be, I'll go back in and I'll rebuy. And at that point, I accomplished what I was looking to do, which was sell high and buy low. Now, if you saw my first video and you followed, you tried to do what I tried to do, maybe you ended up doing it somewhere around here or here, you might have been okay. I think at this point, to get out now, I don't know. I think if I hadn't done it earlier and I didn't think about it till right around now, I don't know if I would sell my funds at this point. I don't know. That's a decision that you need to make with your financial planner, your CPA, or whoever that you use. But the point was that I know in the past when the market was down, I wouldn't want to look at my 401ks because it was depressing to look at, and you don't want to see it. But look, whether you're going to look at it or not, it's going to do what it's going to do. So the best point is keep an eye on it, you know. And I know they always say, hey, you don't lose money unless you sell. Just a way for me to feel that I was able to preserve my principal and interest. And it's better to keep an eye on your funds than to, you know, just let it ride blindly. Although if you invested 20 years ago in the market and you blindly left it there, you typically would have made a boatload of money over these past 10, 20 years or so. But, you know, if there's a point where you could, you know, ride the market and up here you sell and down here you buy and up here you sell, you know, you could really get a jump on your funds, but you've got to be careful because it's easy to lose money. You know, I remember speaking to this wise financial planner one time, and he says that investing in the market is not so much as the money you make, but the principle that you preserve, you know. So that's an important fact. So with that, I hope that helps. Please subscribe, comment, and I'll see you in the next one.